Well, my next guest was buying Google before that big AI event yesterday. And of course, it's breaking out now. I want to bring in simpler trading director of options, Danielle Shay. All right, Danielle, great move. Now, here's the question now. This pop that we're seeing, is it, of course, AI was mentioned over 100 times yesterday. But do you feel it's a trade, or do you think Google is really back in its AI game?
Well, I think it's a little bit of both, Charles. I think that last quarter, Google had an AI event, and I think that it was a little bit of a disappointment, especially coming right after Microsoft's news with OpenAI. And so when you're looking at the comparison that happened last quarter versus this quarter, I mean, the market's showing that they think Google's back, and the announcements yesterday were really strong. So, I mean, I do think it's a trade. I think that trading it up into 120, 122 is excellent. But, I mean, especially from an investment standpoint, if it can break that August resistance zone around 122, 125, this thing's going to be just off to the races, which is why I'm buying the stock as well.
All right, so this is one you're sticking with then, right? You're actually, I mean, I'm glad you brought this up. We talk a lot on financial media about averaging down, right? And realistically, A, you rarely want to do that, I think, and B, you can't really do it more than once or twice, right? But averaging up, buying something that you were already positioning in and it's breaking out, is that because the fundamental story's gotten so much better, it's okay?
Yes, absolutely. And when you look at Google, this had a major drawdown last year. I mean, obviously we know bear market, and Google had a slowdown in advertising and everything else. But I mean, at the end of the day, it's a very strong company, and AI is only one piece of it. We're still going to see revenue growth with YouTube. I mean, YouTube's not going anywhere, right? Google is going to be able to lead a major charge with AI. And so, I mean, I think this is a great stock buy, especially, it's a pretty low share price.
Right.
It's accessible for a lot of investors.
All right, and full disclosure, I have subscribers in it. You just wrote about trading post-earnings momentum. How does that work?
So, Charles, we've had traders saying right now, the market's choppy, there's not a lot to do. But when I'm looking at the market right now, there's so much to do. Between the banks and between earnings, there's been a lot of stocks that have been gapping up and just running away. I mean, take a look at Microsoft, which we discussed as well. When you have a big move post-earnings and you can see volume coming into that stock, and you can see on an intraday basis candles continuing to make patterns of higher highs and higher lows, these are moves that traders can jump on and follow along, both to the upside and to the downside.
Danielle, before I let you go, then we got another round of earnings. They kind of shift to these big, big well-known names like the Targets of the world. You playing those the same way? They've had some mixed reactions lately.
Charles, there's heroes and zeros here, and there's a couple of them that I like. For example, Dick's Sporting Goods. This one has been incredibly strong. I think that Walmart still looks very strong. I have shares in this one as well, and I've been buying shares in Costco. If you look at Costco, this chart has consolidated for quite some time. When charts consolidate like that, they build up energy, and eventually they break out in the direction of the trend. Now, Costco doesn't normally show any kind of blowout earnings, right, because they have very specific margins. But I still think it's a great play in the long term to the upside.
Dick's, Walmart, Costco. Danielle, thank you so much. And folks, we'll be back with your tweets.
I've spent centuries evolving with the world. That's the nature of being the economy.